Good evening.
Yeah, good morning for you.
Yeah, just noon here in the East
Last time we
Coast.
met, we had dinner in Miami,
Yes,
not
yes,
too
that
long
was
ago.
that was not too long ago, but the world was a very different place.
Yeah, we could have a relaxed dinner.
Yeah, it was a very different place. There's a lot to get to today, but let's start with the big reset. So you wrote a book on this. I think maybe even two books now. Um, and I have read. I mean, I skimmed it. I skimmed your
Yeah.
first book. Um, it seems like much of what you wrote about is starting to happen. Is this the big reset? And is it playing out as you expected?
No, I just had a call with a friend, an investor friend, and he asked me the same question. And I said, let's look at the big picture. I've been studying the financial system, well, let's say since the late 1990s, because I was a real estate investor at that time in Amsterdam, and I didn't have any spare money, so I did it all on mortgage. So I had maximum leverage. I bought properties at 120%, mortgage at 120%. So I knew I was using so much leverage that I needed to study the system because I knew when the market would go down, it could kill me. So I've been looking into the system and how fiat money is being created since the late 1990s, and um, that may be aware of the dangers of the financial system. And that's why I wrote the first book around 2006, warning people about a common crisis. When that crisis happened, Lehman crisis, people always ask me, um, well, what will happen next, and how can we save the system, and how can we solve the crisis? And I was answered, I don't know. I was I was fortunate enough that I saw the crisis coming, but after 2009, 2010, 2011, I started to understand the system a bit more, and I started to understand that the financial system can be changed. You can have monetary resets. We've had resets in the past. And I became quite sure that central bankers worldwide would join forces to move this international financial system to the next phase around 2020. And why around 2020? Because if you are just looking at the buildup of the debts worldwide, but especially also the US national debt, it was clear that this was unsustainable. And you, it wasn't that difficult to predict that the system could run for another 10 years max. And that's why I started to write The Big Reset around 2012, 2013. It was published early 2014. And on the back cover was printed at around 2020, huge changes will be needed to come to this international financial system. I think we reached the point now, a few years later, that everybody is aware that we can't continue this way. But what's surprising to me, and which I never envisioned, and also never wrote in the Big Reset, that we would have a president who would tell the world that the US is actually going broke, and we need to cut the budgets now, and we need to redesign the international trading system. I always expected that the initiative would come from, let's say, China, the BRICS countries, pushing the US to the IMF table, discussing a new Bretton Woods, type of meeting in which the successor for the dollar would be discussed and planned. So that's where everything is different now.
Yeah, that is a very deep rabbit hole there. The fact that it's the president of the United States that is the
Right,
catalyst for all the change.
right.
It's not coming from outside, it's not coming externally from Europe or China.
No,
It's coming from within. And this is a very, well, very interesting but also kind of complicated situation, because you think in one sense, like, what was wrong in January? Like, if you're an American, what was really the problem, and what needs to be changed so radically? And then, you're seeing some of these plans start to be unveiled, although it's very unclear what they are exactly, and
yeah,
that's a whole nother conversation. Then you see the stock market impacts, and we haven't really seen the impacts of tariffs on the ground here in North America yet, but it's coming. It's coming. We're starting to see some, news headlines hit that different companies are cutting off service to the U.S., or they're reducing the traffic to the U.S., but we're not really feeling it yet. But certainly in May or June, it's gonna really
yeah.
start to be felt. Um,
But that's the economic fallout. But let's get back to the 800-pound gorilla in the room.
mhm.
And the 800-pound gorilla in the room, and I think that's why Trump couldn't ignore it any longer. He knew, his advisors told him, we need to refinance 9 trillion of US debt within the next 12 months, and the demand is just not there anymore. And that's the 800-pound gorilla. Nobody in the US was willing to talk about, nobody in the institutional circles was willing to talk about. But we, as gold bugs or whatever, or critical thinkers, independent thinkers, have always been warning about this for 10, 15 years. And now we reached the point in January they couldn't ignore it any longer. So you could wait for the crisis, a failed auction, or whatever. But I think, and that's, you have to applaud Trump, he decided to face the problem head on. And you might not like the way he's trying to solve this problem, but he showed the courage no other president has shown before. Maybe Nixon in 71 by decoupling the dollar of the gold standard, because we had a similar problem then. There was a gold standard, which meant that the US had promised to all its partners that surplus dollars could always be exchanged for physical gold. But the physical gold wasn't there anymore, Fort Knox. We all know the letter that has been written by the Federal Reserve to its counterparties in London, explaining in the late 1960s that most of the good gold was gone. So something had to be done to solve that crisis, and that was the famous Nixon shock. And now we have the Trump shock. The Trump shock of March. Yeah, March. I think when we look back 10 years from now, it will be coined the Nixon shock, the Trump shock. Let's start calling it that way.
Yeah, so this is very similar to the early 70s in many
Yeah,
ways, and we're seeing the impacts of it, the consequence of it in markets, and it's starting to feel sort of like the 1970s when, with Nixon, he took the US off the gold standard mainly because the US was shipping all of its gold overseas to pay for the Vietnam War. And so he wanted to spend more on the Vietnam War. He wanted to be able to really unchain the budgets. And that's when the US debt really started to explode, was during the 70s. This is a little different because this is not about spending more, or at least that's in theory it's not. It's about spending less.
Yeah,
But gold is being unchained here. I mean, the move we have seen in gold is absolutely remarkable. And obviously,
yeah,
I follow your tweets, and and I know you read my stuff, and we're thinking along
yeah.
the same lines here, that this move has now gotten to be extraordinary. I mean, 3,500 from 3,000 in just a couple of weeks is something like we've never seen before. And it's like you got to ask yourself, what's driving this? And I come back to, like I was writing the last couple of days, that it feels like this time is different. But every time,
It is.
yeah, but every time an
It is.
experienced market participant starts saying that to themselves, this time is different. It's like, oh, you idiot, you're gonna be bullish at the wrong time, right? So it
No,
feels
but
like this time
yeah.
is different. And it's different for gold this time too. But is that the wrong thinking? Are we fooling ourselves here?
Look what's different now, and you know this as well as I do. When there's a new administration coming into the White House, which have been very open and very vocal about that they would do things different. I've given interviews in the Netherlands, early January, just before Trump entered the White House, that this would be revolutionary in their approach. Because listen to all the interviews all these guys gave just before Trump entered the White House. They would go for maximum transparency, they would change it all. And Trump might be the only president who's just doing everything he campaigned for, you know. And 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 look what happened to the gold market. The huge imports of physical gold in the US started after Trump won the elections. What was it, November 6th? And we all know when you have a new administration coming in with a new financial economic team, with some of the top guys from Wall Street, Scott Besson, and some other guys, they have a plan. And their friends know about the plan. There are always insiders who know what's coming. So they start to position themselves. So once I saw these huge imports of physical gold into the US, and then the prices started to rise, you knew that the US, who had been fighting gold since for over 50 years, since the dollar was decoupled from gold, you knew that this administration had a plan for gold. And they had Scott Bessent uh, saying stuff like, we're going to use the balance sheet in the next 12 months. So if you add it all up, it was quite clear to me that this was a move which wasn't started by China or Russia. I think they they didn't stop by, but this move was designed and started by the insiders around this new administration, knowing that gold would be in play quite soon. And we still don't know what they have in mind. But what I wrote in the big reset some 10 years ago, gold will be revalued through market forces or through initiatives of central bankers. And this is a revaluation of gold by market forces, and I think being helped not by central bankers, but by US insiders who know what's coming.
Yeah, I want to ask you because we saw a lot of gold being shipped from London to New York over the last 3 or 4 months. In fact, it really became crazy in February and March. And it's very hard to get the exact data because obviously a lot of this is private transactions. But I've heard as much as 2,000 metric tons
Yeah,
have
that's
been.
StoneX. StoneX,
Yeah.
and these are very professional traders and analysts who've been
So
using that. Yeah.
that is mind-boggling. Those who understand the gold market, 2,000 tons is a mind-boggling amount of gold. It's more gold than almost every country has in its gold reserves. It's rivaling what China has, officially stated, even though they surely have much more than they officially state. Where did this gold go? Willem,
I think I have an explanation.
yeah.
I think we have an explanation. We have been talking, I've been writing about this for 15 years, how the COMEX has been used and abused by the US to pretend there's an unlimited amount of gold and silver and platinum and palladium available. So the usual suspects on Wall Street were selling paper futures, pretending they had all this gold and silver available, and building the system in a way that only one of 100 contracts would lead to physical delivery. And the system could handle that. And this system worked very well for decades. And the deep liquid future markets were designed by the US in the 70s because they understood that they could change the price discovery for commodities from the physical markets to the paper markets. But when you have all these paper claims on gold, and remember, every trader who owns some future contracts which are being traded in Chicago on the COMEX can ask for delivery. So what has changed now, and I know this from inside because I had a very remarkable experience, and I will try to to explain as much as I can do without harming my sources. But last week, I received a morning comment from one of our brokers, and that morning, in these morning notes, there was a mention that the physical desk of this particular broker was overwhelmed with demands for physical delivery from the COMEX system. Well, what needs to be done when you're overwhelmed with demands for physical gold? And these demands came from, especially from the Far East. You need to deliver. So what do you need to do when you're in charge of the COMEX and you're used to the fact that only 1 in 100 claims leads to physical delivery? When that jumps to 1 in 10, you need to restock physical. So what do? You call your counterparts and you say, I need as much gold as soon as possible. Otherwise, we have a default on the COMEX. So you ship gold from London, from your friends in Switzerland, from everywhere. And by doing this and importing almost 2,000 tons of gold in the US, they were able to not default. But once all the insiders in the paper gold system at the LBMA in London and the COMEX system understood what was going on, it's like musical chairs and the music stops. Then everybody wants to have their physical. And what happens with the price of gold or any commodity when the music stops and everybody wants to have their hands on the physical? You get a short squeeze. And what do we see in the market? It's a short squeeze. And where does it stop? Nobody knows.
Yeah, I mean, yeah, 100%. This is what is happening in gold is a short squeeze, and any veteran observer of the gold market knows that this kind of
Yeah,
trend is
we had
unsustainable. I mean,
3 days, but we had 3 days in which gold jumped over $100 within 24 hours
Yeah.
in the last 10 days. Gold jumped $500 in the last 2 weeks.
Yeah, I mean, so it's giving me deja vu to silver in April 2011, and but I must obviously that move in silver to 49.75 an ounce was unsustainable, and it proceeded to crash, within
Yeah.
6 weeks. But so on the one hand, in the short term, this market scares me, and it's very dangerous. And obviously, we can't go up $500 every 2 weeks,
No.
obviously, but to say that it's a short or it has to go down is also wrong, because it could just
No.
cool off and go sideways
Oh, yeah.
for a couple of weeks and get everybody bored again, and then it could go ahead and proceed to make new highs. So it's very difficult market to gauge and forecast here. And I think at this point, gold has blown out of the water pretty much any technicians price targets. I know some guys have some really high price targets, like 4,300 or 5,000, and obviously that's possible longer term, but in the near term it's really hard to guess the next $200 or $300 move here for gold. It could obviously be up, down, or sideways.
Yeah.
It's interesting because I want to talk a little bit about China and the gold market, because you made a good point there that a lot of that physical that's been shipped into the U.S. was probably done by the COMEX or by parties on the COMEX who are trading on the COMEX, and they needed to bring the physical to actual buyers, their counterparties. But we're seeing it's interesting because we're seeing the open interest on U.S. gold futures decline in the last couple of months. Normally, when that happens, the price is about to roll over. But
Yeah, but
you have to look at China.
it's
So,
different this time,
yeah,
my friend.
China positioning the open interest in Shanghai futures is increasing. So the open interest from U.S. exchanges is literally just moving to the east. So if you look at the full world, the open interest is not really changing much, but you could get fooled by only looking at the U.S. And so,
But did you see the Reuters news today on China and gold? China
yes,
considers
yes,
setting up overseas warehouses for
yes,
China Gold Exchange.
yes,
This is highly significant.
yeah. That I saw that last night, and that blew me away when I read that headline. That
Yeah.
article, because that tells you what their plans really are, and they're gonna use gold to raise the financial profile of Shanghai as a global financial center, and they have a lot of plans for how gold will be, like an integral part of the global trading system, the financial
Yeah.
system, and the world monetary order, which China will play a big part of. And so they're ahead of the game, and the
You
fact.
know, 2 hours ago, I asked Grok, which is Twitter AI, what this means for gold. And according to Grok, this enhances global pricing power for gold by the Chinese. And well, you should do you should try it yourself and just ask Grok the question. And it says this supports the RMB internationalization. This strengthens Shanghai as a financial hub. It lays it all out. And I think it's all part of this. You have this fascinating decoupling now, in which the US wants to decouple from China. And we know China has been leading this BRICS alliance since at least, well, let's say 2017, 2018, building their own trading system, which is a non-dollar trading system. So you have the same decoupling coming from both sides. So you have the same decoupling trend coming from both sides, but they're both building their own new trading system. But this is nothing short of a spectacular financial economic, well, world war almost, and things will start to heat up a bit more before it starts to cool down again. And I'm not surprised that after the US started to weaponize the dollar, China has started to weaponize gold. But it's almost like the US is trying to front run China now by taking the lead on gold and make sure that China can't draw the gold card before the US does.
What did you make of Trump's tweet the other day about, the one with the gold makes the rules? Like, obviously that's called the golden rule, and it's been around for
Yeah,
100 years. But the way he tweeted it, it was kind of a head scratcher. He who has the gold makes the
makes the rules.
rules, but who has the gold?
Yeah, I think Asia has a bit more. Yeah, but it tells you something. It tells you Trump knows gold is the last man standing from a monetary point of view. It shows Trump has a plan for gold, otherwise, he wouldn't tweet it. So it's another indication that this short squeeze in gold is initiated by the Trump administration, by the US. But then it gets very, very interesting because for the last 50 years, we had the US trying to manage gold and they made sure by selling all this paper gold and silver that we wouldn't get a short squeeze like this. And now they're starting one. And if you think that through, what will be the next phases, I can tell you, I can envision many scenarios, but not one of gold going back to $1,500.
Mm-hmm.
And the scenario that gold will run to 5,000, at least 5,000 within a year or 18 months, I think that's my base case scenario. And my bullish scenario that gold will end up around 8 or 10,000 within a few years. That's my second best scenario now. But if we know each other because we invest in junior mining stocks.
Mm-hmm.
We've both been flying and traveling in the same plane to the Yukon and looking at projects like Banyan and Sitka, where gold is still valued in the ground at $10 to $15 per ounce. Look what happens when gold above the ground is worth 3,500 and soon 4 or 5,000, and an ounce in the ground, which is the best and safest vault you can find anywhere in the world, is valued still at $10 to $15. So people always ask me, and still we have 2,000 investors in our commodity discovery fund. Willem, how come you're only up 12% this year? Gold
Mm-hmm.
is up 30%. And then I explain them that investors are ignoring that the gold buried in the ground is still not being revalued. That will be the next phase. And then an ounce in the ground, which is valued at $10 now, will go to 30, 50, 70, $100. And that's what makes this so exciting for us as investors, because this is like insider knowledge, legal insider knowledge. You know this revaluation will happen. And when we look back 3 years from now, everybody will say, "Oh, why didn't we buy more when these ounces were valued $10, $15 per ounce?"
Yeah, I think we all need to really take a step back and put everything into perspective. It's one thing, let's say 2023, early 2024, I gave a $2,700 price target for gold, and that was based upon the way I saw the world at that time in January 2024. Well, we have to rethink everything
Yeah,
and rethink the price targets and everything. When the U.S. president is literally saying he wants a weaker dollar, he's literally talking
yeah,
down the dollar. When he's talking about
yeah,
firing the chairman of the Federal Reserve, when he's starting a trade war with the biggest trading partner and the number two superpower in the world, it's you have to rethink everything. And so many investors see the mining stocks, the gold mining stocks, from the past, from the
yeah.
previous valuation model, the 2023 model, the 2024 model. Well, it's time to rethink all of that, and we're starting to see it, like the move in Integra, Resources. That's a junior gold
Yeah.
producer from 150 to 250. So there are some fundamental re-ratings happening closer to the top of the food chain. It hasn't really filtered down into
But
the
yeah,
juniors.
but people don't have, I always notice this, people don't have the mental flexibility to change their mind
Hmm.
regarding the future. They're always stuck in the mindset of the last 10, 15, 20 years. Um, Even in our office, all the guys working in our office, they were all hired after 2011. They only experienced the bear market. They had two bull markets. One was 6 months, that was 2016, and one was 5 months, that was 2020. They can't envision a bull market which will take 3, 5, 7, or 10 years.
Yeah, yeah. We all have mental scars. We have emotional scars, and some of us have financial scars, obviously,
Yeah,
from the past, and that's why hedge funds don't hire people over 40 because their
yeah.
their brains don't work anymore.
Well,
You need to be able to be flexible and malleable, and you need to be able to really be open to new ideas and paradigm shifts, right? And that's what's hard about markets, right? It's which paradigm shifts are the ones that really matter, which ones should we really pay attention to, and which are the ones we're being fooled, we're being fooled by, that aren't
yeah.
real, right?
We
But
we we hired a junior fund manager, and he's also a quant type of option trader. He's 27,
mhm.
you know. That's fascinating to see what kind of energy and insights a guy like that brings, because
Yeah, that's
that's a
what you need
totally
right now.
different.
Yeah,
Yeah,
that's what you need.
yeah,
You don't need
yeah.
guys like me or guys in their
No,
60s. You need somebody who's
no.
25 who doesn't know about all the bad stuff about mining and junior
Yeah,
mining and just be wildly optimistic.
yeah, yeah, yeah. So
um, so before we get into talking about some individual stocks, which I definitely want to do, and I also want to talk about this Barrick news this morning selling Donlin.
yeah,
I want to
yeah.
ask you, because this is a burning question, and I'm trying to get as many opinions on it as possible. Is it actually possible for Trump to fire Powell? And if he did it, what would the financial markets do?
Um, well, you know, I'm always surprised that people keep saying that the Fed is independent and the ECB is independent and central bankers are independent. That's the spin. That's the facade. And when the president of the US has a totally different vision than the president of the Federal Reserve, the president of the Federal Reserve will go. Can take a few years, or can take a few weeks, can take a few months, can take a few quarters, but he will go. And it will be very interesting to see who Trump um, will name then. And of course, he can't decide that on his own, but well, he can take the initiative. And if somebody like Judy Shelton, or somebody who's a bit different, will be the new president of the Federal Reserve, that will be interesting. And of course, this will be framed, and this has already started, that the rest of the world will lose trust in the US. Well, I can tell you that already happened, guys. We
Yeah.
we don't trust the US a bit. So. there's not that much to lose. And oh,
It's interesting. You say you don't trust the U.S. a bit, which I understand. I talk to many Europeans and Canadians, and so I get the international view very much. So I'm not one of these Americans who just watches Fox News,
mhm,
and
yeah.
so I get it. But would you travel to the U.S.? Would you trust that you would be safe in the U.S.? Would you open a bank account in the U.S. and trust that your money would not be stolen?
Well, it's not about that.
Right.
But wasn't it Kissinger once said the US doesn't have friends, we just have interests?
Mm.
And look, who sold all of their gold? The two closest allies of the US, the UK and Canada. Why did they sell all of their gold? Because the US proposed that or asked that. How much did the US sell themselves? Nothing, zero. So it shows you the US uses um, its friends. And we in Europe understand this a bit better now. And but I've seen polls, and you might have seen them as well. If you ask people in India or China or Malaysia how much they trust the US, it's 10, 20%. Oh, people understand that the US um, has a track record of doing what's good for the US, and that most of the time those actions are very harmful for the rest of the world. And I think we reached a point in time now in which the US is at risk of losing so many friends. And if I give talks and presentations, I sometimes use this frame that in the end, the US could end up being an island in the ocean with just 330 million people. Look what happened to the UK and the
Hmm.
British Empire.
Hmm.
Look what happened to the UK. The UK is on its own now. They're not supported by Brussels or the EU. They're not supported by the US anymore. They're on their own. And look what happened to their empire. That's just 100 years after they still had their empire.
All right, I'm still going to be optimistic on America and the
Yeah, you
greatness
live
of
there.
America and the future of America. But it is important. We need to remind ourselves what made America great. I mean, we were great. We are great. We don't need to be made great again. You see,
Mhm.
this is the flaw, and this is this attitude of the administration, which I voted for, by the way, is kind of toxic because you're right. We're losing our friends. We're pushing our friends
Yeah.
away.
Oh, yeah.
And if we don't have Canada, we don't have the UK, we don't have Germany, what do we have? We just have ourselves, and we're all alone. You're right. We're all alone, in between two oceans. And so
Yeah.
the
Yeah.
greatness of America is that it was a beacon of light and freedom for the world
Mhm.
after World War II.
Yeah.
Let's not lose that.
Yeah.
Let's not take that for granted.
But Robert, when was the last time you traveled to China or Hong Kong?
I've never been to China.
Look, that's what I mean.
Hmm.
You can't understand the world, you can't understand BRICS, you can't understand China if you haven't been there. If you compare the great USA with all its advantages, and you compare that what you see happening now in the Far East, the US isn't first world anymore. You already lost it.
Mm. Yeah, I've heard about the cities in China and how technologically advanced they are.
And
Um,
that's not one or two. There are over 120 cities in China which have over 1 million people. Over 120 million cities. and all the public transport in each of those cities is 10 times better than the public transport in the best city in the US.
Mm-hmm. What do you think about the debt crisis in China? You know, we talk a lot about the debt crisis in the US. Well, China actually fakes all of its financial data and has a
It's
much bigger.
awful.
Yeah,
It's awful, but it's not as awful as the US.
Let's talk
Yeah.
about mining. Let's talk about mining. Let's do a segue. So
Now we can stay
Barrick,
friends. Yeah.
so Barrick sold this Donlin Gold project, you know, in Alaska.
Yeah.
This has been a
Yeah.
15-year
Spectacular.
saga
Yeah.
for Barrick. What do you
Yeah.
make of this? Why did they sell it now? What about the price they got?
Mm.
What's Barrick thinking?
Well, they seem to prefer Pakistan. You know, they spent 1.7 billion to
Mm-hmm.
work on this project in what is it, Balistan, part of Pakistan. I haven't been there, so I'm not an insider.
Mm-hmm.
You can question the way Barrick has been led in the last 10 years. I like Mark Bristow. I almost love the man. He's the only CEO who came up driving to our small office in Ironhout in the Netherlands because he wanted to plug Rand Gold to us. And I was so surprised that he took the initiative. And we always have been in touch ever since. So I like the guy, but well, he hasn't been very lucky with his M&A. Let's put it that way.
It's interesting because there was a Bloomberg headline last month about Barrick changing its name. And then there was
Mhm.
one a couple months ago about potentially moving its corporate headquarters from Canada to the US. And now, you know, we know there's this porphyry belt in Idaho they're very keen on. It seems
Yeah.
like Barrick has some plans for the US if you put the pieces of the puzzle together, but it's not exactly clear what their plans are. And obviously, yeah, you're right. The Reko Diq porphyry project
Yeah.
in Pakistan is
Yeah.
sort of their number one asset in their pipeline.
Next big thing.
Yeah, so
Yeah.
they're pivoting towards copper very much.
Yeah. But the problem with Mark Bristow is he's a great CEO, great guy, but he doesn't want to overpay. Well, I would tell you, when you enter a bull market and you don't want to overpay, you end up with nothing. Look what happens in the tech world of tech.
Mm-hmm.
There's a bull market in tech. Who are the big winners? The guys who bought Instagram for 5
Yes.
billion or YouTube for 5 billion and nobody saw the value. And you always overpay in a bull market, always. And then you end up, it was cheap because it's a bull market.
The problem is that mining is so capital intensive, and all the veterans of the industry are really anchored in the past about all the
Yeah.
bad transactions of the past. And so it's very unlikely that Barrick's going to pay up for any asset. It's more likely they'll
Oh,
just do it on the grounds level. They'll do their own exploration like they did it, like they've been doing in Idaho. They just staked 100,000 acres and they're doing their own work, right? To build
Barrick,
a.
if I can make a prediction, Barrick will be bought by one of the majors,
Mm,
maybe Rio or one or another one who wants to have exposure to gold and copper, more exposure. And they will keep the good projects and they will sell the shitty ones. Just what Newman did with Newcrest.
mm. Who's going to buy Barrick? There's only a couple of possible candidates. They're
Well,
large enough.
Rio, maybe Rio
Oh,
Tinto.
Rio Tinto.
Yeah,
Okay,
yeah.
interesting.
Or
Interesting.
maybe, yeah, we
Rio
can.
Tinto has some copper assets in the U.S., including the largest open pit in Utah, and then the Resolution project in
Yeah,
Arizona. They have 55% of. That's interesting. They've been kind of. I feel like they've
that
been quiet in the U.S., but they've been biding their time and waiting
that
to
will be
strike.
fast tracked. Yeah,
Yeah.
the Resolute project.
Yeah, the Resolution project. Well, obviously that's going to be very capital intensive. So maybe they're planning for all that capital expenditure that's going to happen there, there in Arizona. But I've started to see Rio Tinto get a little more active in terms of staking, doing more exploration. Obviously, they're starting to plan for the end of mine life there in Utah. I'm interested in talking a little bit about your portfolio. I mean, you advertised recently some of your top holdings in the
Yeah,
fund.
first time ever.
Yeah. Tell us about a couple of your favorites. I'm just interested. Like,
Yeah,
Next Gen, you mentioned. Why do you
Greatland
own that?
Gold. Yeah,
Yeah.
Greatland Gold.
Yeah. Tell us
Not
about that.
well. We were lucky to broaden our view and our scope around 2017. So for the first 10 years, we started the fund 2008, and for the first 10 years, we just like most other mining investors concentrated on Canada and all the 1,400 listed companies there. And then around 2017, we started to study Australia, and 400 listed companies there as well. And we had some of our biggest wins in Australia, and that was really helpful. And one of the companies we ended up buying a large chunk of was Greatland Gold. Actually, they were London listed. They're still London listed, but their discovery was in Australia in the Paterson area. And you might remember that Greatland Gold bought the Telfer mine of Newmont after Newmont took over Newcrest and wanted to get rid of the mature mines they had in this portfolio. So Greatland Gold ended up buying Telfer for just 400 million. And the Telfer mine is still in operation. And the free cash flow of Greatland Gold is $250,000 quarterly now. So the free cash flow. And Greatland was valued at only 1 billion in December last year. Greatland is up 130% this year. It's our second largest position. We keep selling shares because it's such a large position. And that's one of the examples that you shouldn't focus just on North America. There's so much value to be found in the rest of the world as well. Another great position, and we both enjoy, is Hercules, because Hercules has discovered a new copper district in Idaho, and the jury is still out whether this copper district will bring 1, 3, 2, 3, or 4 new copper mines, but there's enough copper there to see new copper mines being built in the US, especially with this president and this new, with this regime change and all the red tape being cut in the mining. Another large position is one you know well, Sitka, which is in the process of doing a remarkable gold discovery in the Yukon. It's only valued around 150 million compared to the 1 billion of Snowline Gold. We like Snowline Gold, but I think Sitka is still a steal. They had great results today. And then we have another Australian company, is Predictive. Predictive is working on a very strong gold discovery in the West Africas. It's under the radar for most investors in North America, but that's also up 63% this year. And then we like G2 Goldfields. That's a gold discovery in Guyana, next to where Reunion Gold made their important discovery before it was taken over by G Mining. And we have another Australian name, and nobody has heard about them, and that's Antipa Minerals. And they made a gold discovery and have the best land around the Telfer mine in the Paterson area, which is now owned by Greatland Gold. So, and then the last name in our top 10 is Aya Silver, which is a remarkable silver story in Morocco. So you can see we really invest worldwide.
That has been volatile recently, but it's
Yeah,
a fantastic ore body. Absolutely
yeah,
fantastic. But man, it's been volatile. It was at like 13, then it dropped to 8, and then rebounded to 11. Pretty volatile, but it's a silver junior, so
yeah.
it's to be expected. It's interesting. that you have a good amount of copper exposure in the fund portfolio. Did you notice the copper price moves of the last couple months where we went from 4 to 537 back to 4, and now we're back above 480? What do you make of this very strong rebound in copper and this extraordinary volatility?
We've seen a huge breakout of the uranium prices in the last few years, now in a correction, but I think the uptrend will soon resume. Then we saw a very strong breakout of gold, of course. Bitcoin has had its run. It's starting to run again. I think copper and silver might be the next to break out of a large sideways pattern and could show a very strong run, especially when the market wakes up to the fact that China will need to stimulate again and put even more money into their economy. The EU will start to put more liquidity in the markets, and then the US will change because Trump and h- um, and his team, they wanted to see gold, the dollar go down. They wanted to see markets go down. They wanted to have a correction first because they could blame Biden. And they also have been very open about the fact that then they want to see the start of a very large bull market and a new golden age for the US. So I think they will start to stimulate later this year, next year, before the midterm elections. And I think that will be so in 6, 9 to 12 months, we might see the start of a very strong market again. And then I expect a strong breakout for copper.
I think you just hit on something very important. The era of hard assets has arrived,
Yeah.
and this administration, and can you imagine when he gets his Fed chairperson in, what's going to
Yeah.
happen? Holy cow. I mean, if you don't have exposure to metals and mining in 2026, then obviously you really missed the boat. Missed the boat with
Well,
all the
yeah.
clues that were given along the way.
Yeah, but if he fucks up, you need to be in gold.
Yeah.
If he doesn't fuck up and can create a miracle by playing the gold card or whatever, or doing some refinancing or use Bitcoin. I think these guys around Trump, they're not stupid this time, and they're smart, and they can think outside the box. And I wouldn't be surprised when we see a few special things happening in the way they want to refinance the debt. And um, if you follow the mainstream media, you always get this idea that Trump is stupid and they don't know what they do, and a lot of stupid things happen. But I think that's always with which is each administration. But I think they have a plan. And you don't become president of the US 2 times by making stupid decisions. So he must have a very strong talent by taking very intuitive decisions. And well, I, I can't wait every morning to wake up and to see what happens next, because this will be interesting the next few quarters and years. Yeah.
Yeah, there's no shortage of, entertainment and things to
No.
think about and things to write
No.
about. So I thank President Trump for that. It's keeping me busy.
Yeah.
Um, by the way, I was just thinking, while you're talking, copper is giving us a very strong clue, I think, here that this China trade stuff is maybe a little overdone. And I don't think these 145 or 200% tariffs are going to last that much longer. I mean, If we were in a full trade halt with China, copper would be 250 a pound.
It's up 2%
Uh,
today. Yeah.
yeah, I think copper is giving us a hint here that cooler heads are about to prevail. We will see about that. I want to end the conversation with you offering some words of wisdom for mining and junior mining investors. So it's a two-part question. This is what we'll wrap up on. Um, and you could either take the good part first or the bad part first. It's up to you. What's the biggest red flag that you notice or that you've noticed regularly as a junior mining investor, either from a CEO or from junior mining company presentations or what have you? And then what's the greatest like selling point, the thing that really gets you excited about a junior mining investment and makes you want to buy more?
Oh, that's tough. Yeah.
Well,
Well,
you look at so many
yeah.
companies, you've bought and sold so many companies. I think this is a very important question.
Yeah. Okay. Well, we often go and meet you at all these conferences, and even my our own shareholders in our parent company, they ask me, Willem, do you really need to go to all these conferences, or are these just nice trips? I always tell them these are very nice trips, but it's also very important because that's the only place I can meet the management and look them in the eyes and ask, well, tough questions, but not only ask them questions, you meet them at the bar, you see if they get drunk and how they behave. You see the dynamics within the team. And I think a big red flag for me is when we meet those teams and you just get an awful feeling by the way they behave. Um, we all know Anthony M. um, he's a character, if you meet him on the conference circuit, you never want to be involved with this place anymore. I'm glad he's involved with some of there's a recent court case brought to his attention, and well, and that's what you learn when you're at these conferences. And what was the other part of the question?
So good things and bad things. So good things, like what makes you want to buy a stock?
You often have a situation where there's a not very commercial, but a very strong technical team working on a project where you can clearly see after you studied it for, let's say, an hour or so, that there's so much value to be found. But what's missing is that they can't sell the project. They don't know how to do marketing. I remember coming back from my first fact-finding mission in Australia, and I went there because of all the rumor around Novo Resources and Artemis and the gold and balance sheet nuggets they found there. And then I was introduced to a company who had a large land package, which was called the Gray Mining. And when I started to study their land holdings, they own 250K long, it was a sheer zone. And it ran for unlimited. Um, it was incredible the amount of ground they had, and they showed me there was gold everywhere on that project, but it was low grade. But we kept following that project, and then they did a financing for 5 cents, and we only gave them 50K just to be involved and to help them a bit. We were short on cash ourselves at that time. And when I came back in the office, I showed it to Terence, and I laid out the maps, and I said, "There's gold here, there's gold there, there's gold everywhere there." And so we weren't surprised when they started drilling and they had initial success. And this company is being bought by Northern Star this month, for over $5 billion. And this was a real good example that if you do your homework and you study it and you talk to these guys and you learn, this is a very good technical team, and these are honest and reliable people. and when they get lucky, and if you work long enough in this business, the good people, they get lucky. You know that as well. And then when you understand the story, you can build a position at a very low level. And then, well, we started at 5 cents. It's trading near $3 now. And that's what makes me excited still after doing this for 20 years, because you always can find the next big thing. It's like fishing for grown-ups, huh? There's always a big fish to lurking out there.
Yeah, the problem is there's so many fish. You need to find which one is the big one and which one is going to
Yeah,
grow bigger.
but then as a fund manager, you're in a very advantageous position compared to a retail investor, because a retail investor has limited amounts of money and he only can choose a few. When you're a fund manager, it's very wise to have 50 or 100 positions, and it's very wise to be a long-term investor. So that's what I like being a fund manager. You can spread.
It's interesting you say that, because you could look at that two
Yeah.
ways. In some ways, being a manager of $100 million fund is challenging, because if you want to build a position that's 2 or 3% of your fund, you need to deploy $2 or $3 million. Well, buying $3 million of a $20 million market cap company is very difficult and not exactly practical, right? And you can move the share price a
Yeah.
lot, and it's also very hard to sell. So if I'm just buying $10,000 of a stock, I can get in very easily, I can get out
Yeah.
very easily, and there's no slippage, right? It's much harder for a fund to buy and sell, right?
Yeah, we are now over 150 million Canadian, and we're reaching the point that we can't invest in the illiquid stuff anymore. But in a way, that's good, because just like myself, if you would have followed only the tier 1 and tier 2 discoveries, you would have done great. Look what happened with Idaho Mines. Look what happened with Next Gen Energy. All these companies which started with 20, 30 million and went to 5, 10, 20 billion. Ivanhoe Mines is 23 billion now. We were first introduced to this company when there was 250 million. So we decided to only invest in the strongest projects, companies, and teams, and that you sleep much better doing that.
I agree. Yeah, I agree. I'm going to ask you one more question, just because I know there's a certain audience that would be very, very interested to hear your answer. If you had to bet right now, if you had to guess between now and the final day of 2025, do you think there will be a consolidation or a transaction among some of the companies in the Idaho Porphyry Belt?
Yeah, for sure.
Okay.
Yeah, yeah,
Willem, thank
yeah.
you. Thank you very much for your time. This was a fantastic conversation. I really enjoyed it.
Mhm.
This will be up on my YouTube channel in the next couple of days at Goldfinger Capital. Thanks, everybody, for tuning in.
Okay,
Cheers.
thanks, Ben.
Thank you.